Okay, good afternoon, and welcome to another episode of College and Career Pathways, where every Monday, Wednesday, and Friday at 2 p.m. we provide you with information on various colleges and universities, financial aid resources, technical schools, training programs, skilled trade professions, employment opportunities, career exploration, and career readiness skills, all designed to help you make the best career decisions possible. I'm Tony Cureton, your host. We are continuing our financial literacy um, workshop series, and we have Colleen from Michigan Schools and Government Credit Union. And today we're going to be talking about understanding credit cards and all of that good stuff. Welcome back, Colleen. Thank you.
Thank you. Thank you for having me.
Absolutely.
I appreciate it. I'm working to share the screen here. Come on. Sorry. I apologize. Okay. Good afternoon. So today we are looking at credit cards and kind of some tips and tricks to make them your own. So really, I always start with what is credit, because credit and credit card are not the same thing. The concept of credit is something I think we all understand, but is hard to verbalize. It's the ability to obtain goods or services based on the trust that you'll pay for them in the future. So can I borrow $1 so I can get water from the vending machine? That's extending credit. Can I have this shirt that I want to buy off of you now, but I can't pay you till next week? Okay, that's extending credit. So you need to earn that ability. It's not automatic, right? It's not that just, well, credit is buy now, pay later. Well, it's earning the ability to buy now and pay later. Credit cards are just one example of credit. An auto loan, a student loan, a home loan, any situation of borrowing and repaying. Borrowing and repaying, not just a bill being paid. So credit cards, tool or trap, you'll usually hear one or the other, that, oh, stay away, you'll end up in debt, they're terrible, cut them all off, or aren't they the best? I couldn't get by without credit cards. They can really be either. I think of like your car. Your car is perfectly fine, gets you to work, it's perfectly safe. But if you treat your car, you're driving too fast, you're not stopping in the right places, then it becomes dangerous. But just the car itself is not dangerous. A credit card itself is not bad, but you have to know how to use it responsibly. You have to understand what you're signing up for before you sign up. And that goes for anything you sign up for, whether it's a class or a credit card or a dinner reservation. Not all credit cards are created equal. Young people especially get fooled by what they look like. It's got to have my picture on it, or it's got a puppy or a guitar, as long as it's got something cool on it. And I understand, who doesn't want to have a credit card with something really, cool on it? But that's the least important part. Comparison shop. I can tell you today about MSGCU's credit card, Youth Visa Classic, but I absolutely encourage you to look elsewhere. Look everywhere you can. Don't believe this is your only option, or this is the first credit card you got in the mail, so it must be a sign. This must be the one for me. Well, this guy behind the bench said it's perfect for me because it's a student rewards and I'm a student. Okay, but is that it? Is that all he's going on? So, why are you signing up? What are you looking for? What are you trying to get out of it? What are you trying to avoid? You want to think of these things before you just sign up because it's something pretty. And responsible use helps build positive credit history in the same way irresponsible use builds negative credit history. So it's not just, I have a credit card now, it's what I'm doing with this credit card now will have an impact on me later. Will impact maybe whether I, get a house, or how soon I get a house, or what my first new car is. Is it 15 years from now or 8 years from now? So it is important how you handle, how you manage that credit card, and you understand how important it is before you sign up. So what are you looking for, right? I say find one for you. What are you looking for? Well, things you want to know. Come on. I'm going to go too far now. Yeah. Translating credit card lingo. What do the terms mean? Do you know how to read a statement? What is it telling you? The credit limit is the maximum you can spend. Your debit card, the maximum is however much is in your debit account right now, however much happens to be in your checking account. So that number can change every time you purchase something. Your credit limit is a set number, $500 limit, $300 limit, $2,000 limit. And your first credit cards are going to be small, $300, $500, which is fine. Think about it. If you get offered in the mail, oh, you can have a $2,500 limit card. That's great. You know how much stuff I can buy with $2,500? Do you have $2,500 to pay it back? Because if you don't put yourself in a situation where that could happen. So start small. You can always increase your credit limit as you get older, as you earn more income, as you need more expenses. Minimum payment is exactly what it sounds like. The smallest amount you can contribute towards your bill without any penalty. In the same way that when you get your auto loan and they send you a bill, they don't say, please pay the entire auto loan. They say, please pay at least this minimum, this payment, this $200 payment or $300 payment. And you pay a portion of the total loan each month. Credit cards encourage you to pay portions of the total each month. And it's considering it a luxury to offer you all of this time. We're going to look at some examples of how time can work for you and against you. But the minimum payment is only like 2% of the total. It's a very, very small amount. The APR, you probably heard the APR term on commercials, low APR. Interest rate. It's the interest rate that you're being charged. In the same way, if you buy a car today that costs $10,000 and you hand them $10,000 in cash, you're purchasing it. But if you say, I want a loan and I want to pay for it over 5 years, simply because you have the luxury of taking so much longer, you're going to be charged interest and it's going to cost you a little more. It's only fair, right? How much is that interest, right? Is it, you're paying $15,000 for the car or $10,500? Is it fixed or variable? Not just the number. You want a low APR for a low interest rate, but is it fixed or variable? A fixed rate is going to stay the same. Fixed in position, you think it stays the same. I know that that's going to be my interest rate as long as I have that card. For the next 10, 15, 20 years, they can't change it. A variable rate, however, and be careful because most of the cards that young people will be offered, that get sent to them in the mail or through email, will have variable rates. By definition, meaning it can change. It can vary. It can change, with the market, with the economy. It can change based on your behavior. If you have missing payments, if you have late payments, if you end up, trying to spend over the limit, you could be punished with a higher interest rate. So even if you comparison shopped and you found a good rate, it may not stay there. So look for a fixed rate. Look for a fixed rate, a low fixed rate. understand what your statement says. Don't just look at the total amount and send a bill. Look at all of the transactions. Do they all make sense? Did you purchase them all? You know, you don't want to realize months later or 2 months later that you paid for, you know, somebody else's guitar. Read each one and make sure it's yours. If it looks like something you didn't buy, call the credit card company up and say, I need some more information. This just says North Branch, $20. I don't know what that means. Oh, that's a gas station over at the corner of Branch and North. Oh, okay, now I understand. Yep, I did do that. Know what you're being charged for. So let's look at an example of how credit cards work, how the concept of paying the bill goes. Using an example card of 19.8 APR, which is high. That's high. I would not recommend that to anyone. I'm using that because that is a kind of standard use rate that you'll find at a lot of banks or you know, Capital One, some youth cards start out at some pretty high APR. If you get your brand new credit card in January with a zero balance and you get into a car accident and you end up needing $2,000 worth of car repairs, and you decide to put all $2,000 of the car repair onto your credit card. Well, you get a bill at the end of January that says, "Dear Colleen, thank you so much for using our credit. Would you please pay the minimum payment of $40? I'm like, sure, I can pay $40. I can afford $40. And then at the end of February, "Thank you so much, Colleen. Can you please send us $40? Sure, no problem. Next month, $40. Next month, $40. I'm really starting to get this credit card thing down. You know, I'm paying on time. I'm paying early. I'm starting to feel real proud of myself, you know? Well, if we look a little closer, I have been paying my bill on time, 40, 40, 40, 40. How much have I contributed in total? I paid the credit card company, you know, $200, but because I'm being charged interest, I've only lowered my balance $68. It's only $68 lower than $2,000. And here I thought I was doing so well, paying on time every month and paying the minimum payment just what they asked for. I was doing everything right. I didn't do anything wrong, but you can clearly see that the minimum payment is designed to be kind of just over, you know, how much you're paying in interest. So the balance never really goes down. Let's look at if we took this even farther. If you were to pay the entire $2,000, you can, it's possible. Perhaps you got a card like a Sears card just so you could put the refrigerator on it, and you're taking, you're going to pay the fridge in the minimum payments because, you know, I can afford $20 a month. If you were to pay $20 a month, or excuse me, $40 a month, our minimum payment of $40 a month for our $2,000 debt, it would take 9 years. That seems like a whole lifetime. Like that's. Did you even have the same job? Do you even have the same car? Do you even live in the same place? More important even than the 9 years is over $2,000 in interest. You have actually paid more in extra money. You have paid more on top of what the original cost was, $2,000. So you've shelled out $4,000. You haven't done anything wrong. You've just spent a lot of money. Okay, so let's say you did the same thing. You're still paying $40 a month, but you shopped around, you know, you made sure you found a credit card with a really low limit, with the lowest limit you could find. It's a 12.75 fixed rate that you can just so happen to get at MSGCU, but you do the same thing, pay $40 a month. 6 years, oof, that's still a really long time. I mean, the interest though, wow. I mean, that cuts it in more than half. That's less than 50% of the interest. What a great deal. What a huge difference. Oh, this is good. Ms. McCurkin, are you satisfied? Would you say, oh, phew, I only have to pay $800 of interest? Would that be all right with you?
Well,
Probably not, right? Still kind of
right,
a lot, definitely
right,
better, but it's not that great.
right.
And this is where a lot of people get stuck. Just, I can't, it's just, this credit card just costs me so much. How can I get out of this? I keep paying them their $40. That's just the minimum. You can pay anything over the minimum up to the full amount. Paying more than the minimum makes a huge difference. Let's look at the exact same scenario, but if you're paying $100 a month instead of 40, just $60 more a month. You don't have to get another job. You have to pick up maybe one more shift a month. 2 years, under 2 years, a couple $100. Even the expensive credit card is still less than $500. The important thing to note here is this person, the person who paid $100 a month with the 12.75 rate, got exactly the same service from the repair shop that this person got who paid $4,200. It was the exact same car, it was the exact same repair shop, it was the same job. The only thing that was different was how much you spent after that, right? So there's no quality of service. Well, because my car was $4,000, it was a better job. No, it was the same $2,000 worth of work. You just literally threw away $2,000. Where you could have spent $200, if you paid $150 a month, it would be probably definitely less than $200. Something else to note here is we are only paying that original $2,000. We haven't purchased a single other item. Realistically, within 2 years, 6 years, 9 years, you're continuing to use your credit card, right? You're continuing to purchase other things, maybe not giant items, but $50 of groceries here, $20 of gas here. Well, if you're only making $40, $50, $60 payments a month, and you're spending, you're purchasing more than that, that's how these debts, that's the trap. That's where you feel very trapped by credit cards and trapped by a debt that it seems overwhelming. It can be. And if you don't know what you're in for, if you don't realize it's a variable rate, you don't realize it's a high interest rate, you don't realize that making a late payment is that big of a deal, and they charged me $50 just because I made a late payment. I mean, if you had put $50 more towards it in the first place, you would have saved a ton of money. Do we have any questions on this part, just on how payments of credit card and minimum payments? Because this is at the very beginning of credit card interest is the kind of bonus of I love something that I only have to pay a teeny bit on, but I'm here to tell you, put that thought out of your mind.
I have a quick question. I've always heard that credit card interest is calculated different than regular interest. I mean, normally an annual percentage rate, you see how much you'll pay for the whole year and divide that by 12 months. But I've always heard that credit cards were different. How is it different?
Yes, it is different because it's usually monthly, or sometimes it's calculated daily, and they take that APR and like you said, for the month, divided by 12 or divided by 30. So it's not simple interest. It's
compounded. Is it compounded daily? Is it compounded monthly?
It should tell you on the statement. I've seen both, and I feel like daily would be more expensive. I know one is more than the other by like slightly, but it is compound interest. If you were to say I have a $2,000 debt, well, 2,000 times 19.8, well, that's another $190. It's recompounded every month, so
Gotcha.
You can end up paying on the interest that you've already paid. Yeah.
That must be the big difference, that it's compounded and calculated every month. So every month you're paying interest, not only on your principal, but also on your interest.
Right, exactly.
Thank you.
You think you're doing everything right, and you're paying $7 towards the So remember, your credit card transactions are mini loans. I mean, just like you're saying, do you realize you're being charged interest, every day? It's a loan. If you can't afford that piece of pizza with your debit card, you shouldn't be getting that piece of pizza. You don't need to take out a loan for a piece of pizza. Pay for things with your regular budget, pizza, gas, food, the basics. That needs to be from your checking account. That needs to be money that you have earned, that is part of your budget. A credit card is hypothetical money that you don't actually have. So you don't want to depend on it. You don't want to rely on credit cards. You don't want to build that into your budget of, oh, that's okay, I'll just end up putting that on the credit card. Credit cards are for emergencies. They are for when the unexpected happens. I can get through paying my rent, my groceries, and all my bills just fine. And I even have a little bit of money left over for savings every month. But you know what? This month there was a terrible storm and a tree fell on my car and the roof shingles came off, and that was totally unexpected. Or realistically, what really happened to me is I hit a piece of ice a couple of years back. Flat tire, of course, bent rim. You're going to need to get 4 new tires because they don't make these anymore, and we have to have matching tires. And I'm like, you gotta be kidding me. So those are the type of situations where you're like, I was not expecting this. At least I have this credit card, and at least I have room on it to place this purchase. If you already owe, $1,800 on a $2,000 limit card, you don't really have much of a safety net. You can only have a $200 safety net. So keep it as don't be reliant on your credit card. Keep it as an emergency. Don't pretend your credit card is extra income, right? It's not extra money. It's still money you have to spend. And just because you're paying it later, that means that money is not going to something that you need it for later. So it is not extra income. Don't use credit to justify extravagant purchases just because you can technically afford something or, legally afford something doesn't mean you can, financially afford something. Just because you're allowed to, book your own plane tickets or, order some crazy thing online because now I have a credit card and now I'm an adult. That's just hurting yourself. Don't use that to justify things you couldn't do before. It is a privilege, and it's a tool. We just looked at how it can really, really ruin your mindset, your bank account. You want to use it as a tool. You want it to be there in times of emergency where you can get yourself out. You can pull yourself out, of emergency. You can keep on living, and you don't have these huge, blocks of time with the disparage. Don't postpone saving money because you have a credit card. Absolutely. If you ever think, I'll just use the money in my savings account because that's what the credit card's for, right? Rainy day. There's a difference between a rainy day and your future savings. Your future savings is for you. That's an investment in yourself. Being able to borrow money to get something in an emergency, that's no excuse to not save for yourself, right? You do want to save up an emergency fund. Ideally, you don't use the credit card, right? Maybe you have enough in your savings account. You want to do that first, right? You want to use the money you have first. It's tempting to make the minimum payment. I know it's tempting. You can hold that, 2 $50 bills in your hand and say, well, I could really only just give them one of these $50 bills, and I could use the other one to go out tonight. And that sounds good in my head today, but as tempting as that is, it costs you so much more. Put the whole $100 towards the bill. Pay more. Never pay the minimum balance. If the minimum balance is 40 and you feel like you really can only pay 40, pay 42, pay 43. Pay something that's more than the minimum. As a rule, never let yourself pay that minimum, where they're always contributing something more. All right. The biggest point, which I haven't stressed, is you'll pay no interest if you just pay the total balance. If you're only using your credit card for items that you feel you can afford, that you can pay off within this month, you know, I'm going to buy this shirt today, but I know I'm getting paid later this week, and I can pay for it out of that. And then at the end of the month, I pay my credit card bill, and I only pay for the items I purchased. It doesn't cost me a cent. You can have a credit card for years and years without paying a cent in interest. But you have to keep track of that. You know, the credit card company is not going to call and remind you and say, man, you know, you've really been racking up a lot of fees. You should pay more attention. No, they love your fees. They love when you're not paying attention. So if you're paying attention, you're asking questions. I don't understand this on the statement. Where did this come from? Why did this number change? Know what you're signing up for. Because again, that's a contract. The decision to lend you money is based on how much the lender trusts you to pay them back. That's the concept of credit, right? So throughout your life, there's going to be some time where you need maybe a larger chunk of cash. You know, homes are very expensive, you know, education very expensive. Maybe you lose your job and you need to take a loan to pay off some of your bills. Everyone talks a good game, right? Everyone can smile and say, I'm so responsible. I help little ladies across the street every day. You'll never meet a nicer person. And I'll convince you that, you know, I pay everything on time. But that's just my word, right? Your credit card activity, your behavior, whether you borrow and pay on time, if you borrow and pay late, how late, if you try to spend over the credit limit, if you're only making minimum payments, all of that content, all of that information gets tracked into a credit report, basically your adult report card. Is that the next one, or is there another one? Okay, yes, next one. You're building credit worthiness. You're building basically a report card for yourself that someone can look at and say, oh, they've been very responsible in the past, so I'm predicting that they'll be responsible in the future. You know, they've been hit or miss. They've been kind of responsible, but they've definitely missed a couple payments. I'll offer them the loan, but I'll offer it for a more expensive price, for a higher interest rate, because I want to make sure that, you know, I'm going to make it worth my while. If I have to be calling them and bothering them to pay me back, I better make some real money on this. So your credit card use is all about trust. The credit card company, whether it's your bank, your credit union, are trusting you to pay them back. And the more you pay them back, the more responsible you are, the more responsible, trustworthy you look overall. Meaning your future auto loans, your future, any other credit card, if you decide to get in the future, like a rewards card, that's another thing. Do not start looking for a rewards card. Rewards cards have a place. They can earn you money. They can earn you, miles or rooms. But to earn enough to take advantage of that, to spend as much money as you would need to earn those points, I'm going to guess is kind of out of the league right now. That's spending way more money. And when you get there, when you're a little older and you're taking flights all the time, or you're, staying at Marriott all the time, or you need a gas card because you're driving her all the time, then that would be a great financial move to look for a card that meets your special needs. But if you're 19 and, you take road trips everywhere, you do not need to pay a higher interest rate and probably an annual fee, maybe $150, $200 annually, just for the luxury of having the credit card, if you're not going to earn enough miles to make it worth your while, right? So reward cards are not bad, but they're usually not free. Whereas a so-called, standard regular credit card is free. All you have to do is pay what you purchased. So if you want to ask about, is there an annual fee? If there's an annual fee, I'd put that one on hold and keep looking, because you shouldn't have to pay money just for the ability to be able to pay your money back. Being trustworthy will not only get you approved, it'll get you that lower interest rate. And you think, well, you know, that was 12%, 19%. What's a couple percentage points? Well, we saw how thousands of dollars can be in percentage points. I mean, think of student loans. Think of a home loan where we're talking tens of thousands, maybe $100,000. I mean, 1% of $100,000 is still $1,000. You know, that's, you think, you know, 0.5% or 1% doesn't make a difference. That's $1,000. So you really do want what's best for you, you know, not paying attention and allowing the variable rate to go up, allowing it by signing up for it. The only way to stop it is to cancel the card. You do not get to decide when it stops. You can really start doing some damage for yourself. So you want to set yourself up on a positive path. You get more opportunities, more financial freedom. If you start smart, if you start small, you start early with credit, when you get into your 20s, when you get into that career, you're already going to have a great credit score, and you'll have a great credit history to prove yourself. Okay, were there any questions on credit cards or credit? I didn't get too much into credit reports, but just understand that the better you are with your credit card, the better you're going to be overall.
Or did you talk about the utilization rate or no?
No.
Okay. So my question was, I put a little comment in the chat. You know, far as I know, they've recommended 30%, but I'm always learning more. And so now I'm learning that they're saying, oh, you should really stay below like 9%. So what do you recommend about that?
It was stay below 30, but now I've seen the like try to stay below 30, but we're looking for 10. We recommend 10. The sweet spot for earning yourself credit is keeping about a 10% utilization rate, which is the balance that you carry over. Well, the balance that you pay or how much you owe is only about 10% of the total amount you're allowed to borrow. So ideally, that's great. Sure, just don't buy anything, you know, and then you'll have a great utilization rate. But as soon as you buy that laptop or that car repair, if you owe $900 out of $1,000 limit, that's a 90% utilization rate. And when you have just one credit card, it's even more important, because when you have multiple credit cards and multiple loans, you can kind of balance it out and juggle it. But if we're looking at one credit card only, and you owe $450 out of the $500 consistently, even if you're paying on time, that doesn't look great. So that's a great point, to not just be paying on time, but to keep that utilization rate, the percentage of how much you owe, very low.
And I've also heard you should pay early instead of just on time if you can, and more than once a month if you can.
Really? More than once a month, I've heard. I haven't heard any particular benefit to early over on time, but I certainly encourage early.
Supposedly, it helps your credit rate. If you pay early, it'll, like 2 weeks before, it'll help your credit rating.
All right.
And I've tried it. It works. If you can pay, the more you can pay and the less you can use those cards, all of it works. You know, if you can be disciplined enough to do that.
It's all about self-control. And that was another point. I apologize. Why is it so low? Why do I only want, $500 to spend or $300 to spend? Because you need to just get used to the self-control. You need to get used to carrying your credit card around and not using it. You need to get used to shopping online and not pulling out your credit card. You need to get to a point where, you can carry it around. And if you do make a mistake, if you do slip up and buy yourself a coffee, it's a coffee, so you don't want to put yourself in a position where you're still learning, you're still figuring it out. So just don't set yourself up for failure. Set yourself up, where you can keep practicing, but it's still a low limit. You're not gonna put yourself into the poorhouse over $300. And I would also recommend going to a credit union, of course, just if you're comparison shopping, banks over credit unions. Credit unions tend to have fixed rate credit cards, which are the best. And they offer a decent rate to youth. Our Visa Classic that if I were to walk in and apply for is $12.75. So the same one that an 18-year-old is applying for. We call it the youth visa, but it's literally exactly the same. It's the same low rate. Were there any other questions? See, I'm looking in the chat here.
Colleen, do they make charge cards still?
What do you mean? Like retail cards?
Okay, charge cards are 30 days and the balance has to be paid. Do they still make those?
I have not, not to my knowledge, not the credit unions that I work with or any of the financial educators. We haven't discussed at all recommending that or anyone who offers it or
American
so I
Express
haven't seen that.
was one of the main companies that offered charge cards.
Who was it?
American Express.
Oh, American Express. Yeah, and the question about the APR with the payday lending is it's only a 15% interest rate, but it's 15% for 2 weeks. So if you take that 2 weeks and times by 100, you're getting 500% interest. So that's just another reason to completely understand what you're getting. What happens if I do not pay in full at the end of the month? How much do you charge? Do you charge me a late fee, 5 days? Like there's a little grace period and then you charge a late fee? Or do you charge me a late fee at midnight if it's, not in that day? Is it a $25 fee or is it a $50 fee? There are definitely questions you want to ask. If you are getting a promotional card where it's, 0% for 1 year, and that sounds great, but often it'll be, you have to pay it off completely, pay off any balance within that 12 months. Otherwise, you got to pay back all that interest. If you have anything left on it, then you pay back that interest. I know like furniture store cards are like that. And if you plan ahead and you say, I can pay this couch off in 12 months and I want to make sure I pay it off in 12 months, because if I don't, and I still have a balance remaining on the 13th month, I got to pay back all the interest that I didn't have to pay. But if you know that and you plan ahead for that, then you can avoid it altogether. But if you're not paying attention or what month is it, or that's okay, maybe the maybe the interest rate jumps up to 25% after 1 year. You really want to know, what's going to happen, what's the next thing, what's the other scenario, so that you can make a better choice for yourself. Right. As I'm gonna ask more about charge cards, because I really haven't heard of any institutions offering those, which I think is a good thing. Yeah. But if you're looking for something along those lines, in the sense of like a willpower, like you don't want to allow yourself to have these long carrying over balances, I would suggest a secured credit card. A secured credit card would be usually a low limit, $500 or $1,000. You give the credit union $500. Here, you put it in a nice savings account, And then now I have this $500 limit credit card that I use and pay the bill and use and pay the bill. But if I just disappear or I stop paying the bills, they've got my $500. So they didn't lose anything. And that is sometimes if you have lower credit and you're trying to rebuild, or you can only get a credit card with a really high interest rate, if you can start with a secured card, you know, that has a secure backing and prove that you can purchase and repay, then you'll shoot up the credit faster and get a lower interest rate card sooner.
Good deal. You guys got any other questions before we wrap up?
With the secure card, if you are good with what you're doing and you pay it off, at a certain point, you can switch it to an unsecured card.
Yes, usually about a year, sometimes 6 months, 6 months to a year is pretty standard. So yeah, which isn't really too long. I mean, if you do what you're supposed to do for 1 year, I'd like to, you know, you can handle that, I hope. But yes, that's part of the road to a better credit situation.
All right, then. Thank you again, Colleen. Excellent presentation, very informative. I know our students will benefit immensely from this tutorial on how to handle, deal with, and work with credit. Thank you guys for joining. And I wish everyone to have a wonderful rest of the day.
Thanks again.
Have a better one.
Thanks, all. Have a
Bye,
good
you
day.
guys.